What's up, everybody? It's Rashad here, and today I want to talk to you about my 5 factors that make up a great company. Now, these are 5 things that I look at prior to making any investment into any stock. Now, I am an investor and a trader. I actually make my primary source of income from options trading, but I am also an investor. So when I want to invest in a company, these are 5 things that I look at prior to making any purchase. All right, so let's get into it. So one of the websites that I use to evaluate companies is called Ticker Terminal. So we're here at Ticker Terminal. This has an absolutely free version. It also has a paid version, but you can feel free just to utilize the free version for now. But on the overview page, it will give you some general information about the company. So if we look here, it shows the 52-week high was 332, which is actually above that today. Today is a huge green day, so it's making a new 52-week high today. The market cap for the company is $845 billion. So that is the value of the company. If you wanted to purchase 100% of Meta, it will cost you $845 billion to do so. So this is just the overview page, but the first thing out of my 5 factors that I look at is the price to free cash flow. Now, price to free cash flow is simply the price of the company divided by the free cash flow that it had over the last 12 months. Okay, so you would take the market cap of the company, which is the price, and then you would divide it by the free cash flow that the company had over the last 12 months. Now, this is simply a valuation measure. You want to see how expensive or how cheap is this company currently based on the amount of money that it's making. And the reason I start off with this is because if a company is too expensive already, then there's no point of really even going on any further. It's kind of like going to a store and checking out some shoes that are worth maybe $250, but if you see the store has it priced at $900, you're probably not going to be interested any longer. It's still the same amazing pair of shoes, but they're way overpriced, so why will we even keep looking at it? So same thing here. So let's head over to the valuation tab here. We've already typed in Meta, which is what we'll be looking at. So I'm going to click on valuation. And if we scroll down here to trailing multiples, right here you can see LTM, which stands for last 12 months. This one down here. So you can see here LTM stands for last 12 months market cap divided by the free cash flow. Okay, so this is the number that we're interested in. And if we look at the most current data, 28.74 is the number. So like I said, I'm looking for a number that is under 30. So since it is under 30, that's a check mark for our price to free cash flow. Now with Ticker Terminal, if you click on what you're looking at, it'll give you a graph. So if you are a visual person like I am, you can kind of see the graph. So this shows the price to free cash flow over time. So this goes all the way back to July of 2019. So you can see the price of the company had become more and more expensive. However, then in 2022, which was last year, the stock price came down quite a bit, which made the price to free cash flow much smaller. So you were able to buy the company at a cheaper price than you were previously. So that shows that over time. But price to free cash flow, we have a check for Meta. So that's one check. And now our next thing is to see if the company is growing. In order to do that, we'll look at, does it have growing revenue and free cash flow over the last 5 years? So let's take a look at that. We'll head over to detailed financials. And the top line, the very first line, is revenue. So we can go ahead and click on that, and it'll give you a visual presentation. And we can see 5 years ago in 2018, actually let me hit show labels. In 2018, they made $55 billion in revenue, which was amazing. But over the last 5 years, it's continuously grown. And so in the latest year, it's made $116 billion in revenue. So that is a check. 116 is much more than 55. So they have grown revenue over the past 5 years. Now we need to look at cash flow. So we'll scroll down here. So this was the income statement. Now if we head over to the cash flow statement, and then we will scroll down, we want to find free cash flow, and here we are. So you can see here, it went from 15 billion in 2018 to 37 billion over the last 12 months. So we can go ahead and click on that if you want a visual presentation of it. All right, so 2018 15 billion. Let's remove the revenue so we can see it by itself. 15 billion there. And then in the year ending in 2022, went to 19 billion. All right, so 19 billion is bigger than 15 billion. The free cash flow is growing. So that is a check for both the revenue and the free cash flow. That is what we like to see. All right, so that is, Meta is a growing business. So that is factor number 2 that Meta gets a check for. Now, the third thing that I look at is their return on invested capital. I want that number to be above 10. All right, so it's also known as ROIC, return on invested capital. Now, this is essentially what can the company do, what can the management do with the money that you invest into the company and that money that they have from debt. All right, what type of return can they get from those funds? So if they have a 10% return, for every dollar that you invest into the company, they're able to make 10% or bring out 10 cents of it as a profit to their net income. And this number really shows how good management is for that specific company, because a CEO's job is really to be an allocator of funds. So if they're able to bring in a much larger return on your invested capital, that shows you that they do have a good management team. So let's take a look. For this, we will head over to ratios and we'll scroll down and you'll see it right here, return on capital, which is the same as return on invested capital. Now we want this number to be above 10%. And we can see here the most recent data for Meta is they are at 24.3%. So they are doing an amazing job. Above 10 is my threshold, but if they're above 20, they absolutely know what to do with the money that is invested into their company. Okay, so if we click on here, we can remove the other factors and you can see now their return has gone down over the last 5 years, but it's still well above 10%. So this is perfectly fine. Now, the fourth thing that I look at is current assets over current liabilities. And this essentially shows us if the company is in a good financial state. And it's no different for a company than it is for a business. If you as a person have more debt than you have cash, then you're in a bad position and you're in the risk of going bankrupt. However, if you have more cash, much more cash than you have debt, then you're in good shape and you have nothing to worry about in the near future. So let's take a look at Meta's current assets over their current liabilities. So we'll head down here. For this, we will go to the balance sheet. All right, we'll scroll down and here we have total current assets. Click on that and it looks like currently at $78 billion. And then we'll find total current liabilities, which is currently at $30 billion. So that immediately is a check. Meta has much more total current assets than current liabilities. So we can go up here and take a look at those. They are in very good shape. Now you're probably asking, why do I choose current assets and current liabilities over total assets and total liabilities? Well, the reason for that is because if they have any capital leases, so any buildings that they are renting out, unfortunately, the total amount owed for the rent throughout however many years that they are there is calculated into their total liabilities, which really doesn't show you accurate information because their rent will be paid every month off of their cash flow that they're making every month. Now, I know this from personal experience because I owned a few ice cream parlors called Ice Cream Rollery. And so we had a 5-year lease, and of course our monthly rent was always paid out of the free cash flow that we made during that month. However, if you look at a balance sheet, it will show you the total rent owed over the entire 5-year span. So this is why we look at current assets over current liabilities. So Meta checks the box for this as well. And the very last factor that I look at is, has the company been decreasing their shares outstanding? Now, what is this and why is that important? Well, let's say you have a box of pizza and the pizza has 10 slices of pizza within it. If one slice of pizza is yours, that means you have 10% of the entire pizza. However, let's say somebody came and bought 2 pieces of pizza. Well, now there's 8 pieces of pizza, but you still own 1, right? So now you own 1 out of 8 slices of pizza. So now you own 12.5% of that pizza instead of the 10% that you owned before. So when a company buys their own shares back, they're giving you a bigger slice of that pizza. You own a much larger portion of the company when they buy shares back. Now, this can go on the opposite end as well. If the company issues more shares, well, they are diluting you as an owner. So now let's say with that pizza comparison, if there was originally 2 pieces of pizza and then you added 2 more pieces of pizza to it, now you own 1 out of 12 slices of pizza, and now you've diluted yourself and you own a smaller portion than you did before. So we want to check and see if the company is buying back shares, if shares are staying the same, or they are diluting their investors. So we will come down here. We'll remain on the balance sheet and we'll scroll down. All right, here we go. Total shares outstanding on filing date. All right, so 5 years ago, they had 2.8 billion shares. And during the last 12 months, they now have 2.5 billion shares. So they are successfully buying back shares of the company. So let's take a look at that just so we have a visual representation. And that is working out great. They are buying back shares, so the shares are decreasing. So if you owned 1 share 5 years ago, you have a bigger portion of the company now that they buy back shares over the course of the last 5 years. All right, so Meta has now checked all 5 factors that I look for prior to purchasing a company. Now you can go on and check current news for the company and look at a few different things. But if you decide that yes, you do want to buy, here's how I buy. I typically don't purchase just shares of a company. Like I told you before, I am an options trader. That is actually how I make my primary source of income. So what I would like to do with Meta is sell puts at a cheaper price in order to purchase them at a cheaper price. Because as an investor, you always want to buy companies on sale. You want great companies at a great price. So let's pull up the options chain. All right, so here we have the options chain. This is through TD Ameritrade's Thinkorswim app. This is what I mainly use for all my options trading. And so here we are at the options chain. So I'm currently on NVIDIA. So let me go to Meta. All right, so in this case, I would probably pick an expiration within 30 days. So let's go for December 8th. That's 24 days from now. And the stock price is currently at $334. So I would want it at a cheaper price. So I would come over here. Let's say I'm comfortable buying the company at $295. Well, you can see here the bid and ask is between 68 cents and 71 cents. So if I were to sell 1 contract, so I go here and sell 1 contract, I would get paid $68 to sell this contract, and I would get paid immediately, and I would give the buyer the right to force me to buy the shares from them if the stock price is below $295 by December 8th. All right, if that is the case, then I will be forced to purchase 100 shares of Meta at that stock price, and I still keep the $68 I was paid. However, if Meta is above $295 on December 8th, this contract expires worthless. I just keep the $68 I was paid, and then I can go on and sell more contracts if I so choose to. Now, if you are currently working a 9-to-5 and you would like to make money from the stock market like I do, I have a full course and an online community called Trade to Freedom where you can join and see my exact trades in real time and just make money as I make money. And you also have a full course if you are new to options or you're new to option selling. We have a full course also titled Trade to Freedom where you'll learn everything A through Z. So come join us in the community and reach financial freedom with us. The link is down below in the description, and I look forward to seeing you guys soon. All right, peace.